We start today's market talk. It amazes me at how quickly the sentiment can move in one direction and for how long, the extremes it can reach despite logical arguments to the contrary, and the intensity of the swing back. There was a market meltdown as the US Fed didn't live up to the promise of four rate cuts in 2025. There is a shakeout in bonds, currencies, and stocks after that. But path to an easy run in markets in 2025, which had become kind of a exceptionally narrow and extremely crowded with like-minded views of everyone, is now in doubt. What Powell has done, he's done a favor to us by reminding us that next year will be volatile, and please don't go by the wisdom of crowd. That is not your friend. Now, market outlook. US growth is strong and inflation continues to be stubbornly above target, and there were innumerable signs of irrational exuberance, best seen from the sharp rise in meme coins such as Fartcoin, up 428% in the last 1 month. So, though the hawkish cut in the US was expected, as seen by the fall in Dow Jones over last 10 odd days, but the sentiment was super bullish with record low allocation to cash in the US, high allocation to US equities, driven by Trump to exuberance, US growth optimism, and a compliant rate cutting Fed. Market expected a double engine of US growth and rate cuts, but you can't have both a fiscal and monetary easing together. Now, the US 10-year yield has jumped to 4.5%, and the dollar index is close to 108. A strong dollar is negative to emerging markets, and EM currencies are in for pounding next year. Trump policies are expected to keep inflation from easing too fast, which means Fed won't cut rates too rapidly. So there is little incentive for foreign investors to stay invested in EM assets now, because the currencies are depreciating very quickly. It's not a gradual depreciation, and US yields are rising. So it's a safe option to be invested in US bonds. Whatever happens in the currency market does not stay in the currency markets. It can have a profound impact on the broader financial markets and the economy. Now, to limit the depreciation pressure on the rupee, RBI ramped up its interventions in the forex market, but it took out liquidity from the banking system. And that is the reason why if there is no liquidity in the banking system, the broader economy suffers, because the cost of borrowing goes up, and this is because of lack of liquidity. And also, RBI's net short positions in currency forwards are draining out liquidity from the banking systems significantly more than the liquidity infusion due to CRR cut. So that is another issue. To manage currency is becoming a problem for the balance part of the economy and markets. In 2025, the Indian economy needs solid proof of being on the right track. Fundamentals on the ground will need to show signs of improvement in order for the stock markets to rally. So now that easy money has been made, so despite the retail investor support through mutual funds as well as directly in equities, fundamentals will need to show signs of improvement. Q3 earnings season will shed some light on whether rural economy is recovering, what is the status of urban demand, exports, and private capex. Because without earnings, these elevations become very expensive. Now, coming to US equities actually bounced back on Friday, helped by soft November core personal consumption expenditure price index reading. It edged up by 0.1% month on month in November, less than 0.2% consensus, and cooling from 0.3% in October. But most probably, Fed will wait to see how tariffs and immigration policy unfolds over the next coming month before we see another rate cut from them. So what is happening is, if you see the US bond yields, they are going up. It was trending upwards, then they went down, it kept going down, then it started going up, and now again the uptrend has started, because expectations are not of that expectations of rate cuts have been diminished as such. So it really reached 4.5 last week. Now dollar index, so if you see here, from the high, it has already retraced more than 50%. It came back, but it now coming back. So First possible resistance is around this 61%, that is 108.99 or 109 levels. It can go there. If it retraces, it's okay. Otherwise, it will go all the way back. So it depends on what is the policy action after this, and dollar is likely to become more and more stronger as the money moves into US and EM equities are sold. Now, Brent crude is at the similar level, down around 2% last week. This basically due to expectations of low demand in the next year. Gold is also correcting right now, so it has come down to this trend line support. So let's see from where it goes. Went down, but then it bounced back on Friday a bit. But last week it corrected around 1% or so. So this is also correcting now. Copper also corrected around 1.14%. So that means economic expectations for the next year are not very high. So basically, the Chinese recovery thing is slightly doubtful now. Now, Bitcoin also corrected last week, big time, 6.75%. It was also overbought as such, so it corrected from that 108,000 levels to down to 92,000 levels. So very volatile, $16,000 movement for one Bitcoin in a week as such. So pretty volatile, and it is basically number of reasons. One, it was overbought. Second, the Powell statement, etc., where he says that they will not have Bitcoin as a reserve for Fed. Nasdaq corrected around 2.25% last week, but rebounded a bit. And though it is still in a channel as such on an upward trajectory, so let's see. Dow, it corrected. This is a daily chart. So if you see, though it's in a rising channel, but it corrected continuously for 10 odd days before the Fed meet. So that means this was expected. A hawkish rate cut was expected. It came down, and then on Friday it has bounced back. So basically based on PPI data. So let's see. India VIX in the last week, on all days it climbed up, and now it has reached around 15 odd levels, so higher than 15. So it is on the rising trajectory, which is leading to bigger gap ups and gap downs, and also higher volatility in the daily intraday volatility has increased, and the option premiums are also higher. USD INR. Just switch off your volumes, please. USD INR is depreciating, and it hit that 85 level, and it is going down. So it is not the that it is depreciating. Switch off your volumes, please. So it is not that the depreciation is a problem. It is that it is the pace of depreciation. You see, the trajectory of depreciation has suddenly moved up vertically higher. So that is the problem now, and that is why there is a fear. Now, Nifty, if you see the weekly chart, the weekly candle was very, very negative. So this was a very strong bearish candle on the weekly charts. It clearly broke through the levels. Now, coming to the daily charts, if you see here, this was the last week. So last week we were at 24,800, and then we came down very drastically, and now we have broken the 200 EMA decisively. So next probable target should be the lows it had made in November, around 23 to 63 odd. That was the low it made in November. So that should be the probable target. And after that, we'll have to see. But the trend is not looking very strong. And the other point was, if you see the hourly charts, see, it took nearly 3 to 4 weeks for it to go back from the lows to the 24,800. That is the 50% retracement. And then it came down in a week only back to the same level. So that is disconcerting, because the fall was brutal and rapid. And though on the hourly charts, if you see here, it's oversold. So there is a bounce which is expected, and the bounce can easily go because the 20 EMA is at 24,000 because of the steep fall. So it can easily go up 200, 300 points. And I think as it is, Gift Nifty is showing a gap up after the US market. But whether that is sustainable, we'll have to see. It can get sold off. Now, this is the problem, Nifty option chain data. Now, see this very carefully. This is for 26 December expiry. So now if you see here, this is a put side, this is a call side. Now coming from the top, the maximum open interest on the call side is at 23,000 and 23,500. So these should provide some kind of supports. If you see here, there are still 2,23,733 people who are in the money who have written puts in Nifty, and more all along the way. Now, these are the people which is the problem, because they are, if you see here, they have unbounded around 1 lakh trades or lakh positions last week. But, in the last trading session. But still, so what is happening is at every rise, they are squaring off, and that is taking the index down. So this segment is where these people had written aggressive puts or done aggressive put writing. This is the one which is causing a problem, and so it's a technical problem. So till the time these positions are not cleared, Nifty will be halted. The rise will be halted as such. Now coming here to the call side. So if you see here, the maximum call writing is at 24,000. So that should provide the resistance. And if you see here, there are few people who are in the money aggressive kind of call writers also, so they don't expect the markets to go up. But at every on the last trading day, so many call positions have also been written. So that means people are bearish. So this is the problem, and this market is affected due to a technical problem. Now coming to Nifty Bank, similarly a negative candle, which was pretty huge. On the daily charts also, this candle is coming down, and now the 200 EMA is at around 50,400. So though it is slightly better off, it has not yet gone to 200 EMA, but people were talking about 54,000, 57,000, and in just 4 trading sessions, it has just come down and broken through all the technical supports and has come down. So it shows there is no as such no strength in this market. Now HDFC Bank was the problem. In my opinion, 18,000 remains a resistance. So if 18,000 is not taken out, then it may go and test this 20 EMA at 1725 as such. So this should be the level to watch out, and this has been used to bring the index down. The other problem is Reliance. It has broken the lows it made in November, and now it is at around 1200 levels. So right now it's looking very weak as such. So if it doesn't recover, then it may test that 1100 odd levels. It had the lows it had made last year. So the full year's earnings are zero or the gains are zero in Reliance as such right now. So if you see here, this was at these levels in December also. So the full year gains have been given away. Midcap was the basic concern because it made a bearish engulfing candle on the daily charts. So from trading above 20 EMA, it came down, and now it is testing the 100 EMA. So that should be a concern. The next target should be around the 200 EMA. So that shows that the broader markets also corrected, though it had a decent rise post the last lows, but that has been negated in 4 or 5 trading sessions. Similarly with the small cap, this is a daily chart. So if you see here, it had a continuous rise, made a fresh high, and now again it has also made a bearish engulfing candle. So that is also gone. So if you see now, the Dow Jones corrected for 10 straight days, and Nifty was down 4.7% this week. Hawkish Fed weak high-frequency data in India and weak consumption data in China, which is causing problems with the uh, commodities, is leading to weakness across equity markets, and crypto and gold rally has also halted while dollar has zoomed. So as we have seen right now, Nifty has formed large bearish candle on the weekly chart, and bearish engulfing candles can be seen on daily charts of mid and small cap indices. Uh, Bank Nifty is slightly outperforming as it is still away from 200 EMA support. RIL Reliance has broken its November low. Nifty is oversold on hourly chart, so there may be small pullback on Monday or Tuesday, but a positional setup of Nifty remains weak. We may see a final move towards, or small move like next week towards the November low of 23,260 odd, closer to monthly expiry, but you can't really predict. 24,000 should be a resistance due to maximum call writing, as I've shown. January onwards, earnings will start with a possible rate cut in February with budget. So the endeavor should be to buy the fear. Now I'll cover three stocks today. First is BEML. It's a very interesting company with so much of enthusiasm built into it and such good businesses it is in, but the performance is much below expectation. So it's a public sector undertaking established in May 64, operates under three major verticals: mining and construction, defense and aerospace, and rail and metro. Company is exploring new business areas such as overhauling armored recovery vehicles and high mobility vehicles, supplying platforms for gun systems and developing strategic equipment like futuristic wheeled and armored combat vehicles. Its unexecuted order book stands at 11,500 crore as of September 30th. Order book stands at 2.8 times operating income on trailing 12-month basis, which provides adequate revenue visibility over the medium term. Order inflow stands at 440 crore in Q2, 613 crore in Q1, and 7299 crore in FY24. So order book is great. Company order book position will remain robust with orders coming from all three segments. Growth in R&M, that is the rail and metro, which is the most sought after segment, is expected to be higher. It comprises highest share of 46%, followed by defense 40%, and balance 13% from mining and construction. It is into manufacturing state-of-art stainless steel metro cars since 2002. It indigenously manufactures the passenger rail coaches for broad gauge for the use of Indian Railways. It is at forefront of supplying Vande Bharat coaches and maintenance equipment. It was awarded a contract of rupees 675 crore from Indian Railway Integral Coach Factory to produce India's first 10 Vande Bharat sleeper train set. It has near-term order prospect of 10,000 crore for metro cars for Bangalore, Mumbai, Hyderabad, Chennai, and Patna projects. It is actively bidding for metro and rail projects internationally. It offers a comprehensive and diverse range of mining machinery for both open cast and underground mines. It is advancing into maritime sector. This diversification strategy aims to capitalize on emerging opportunities and foster indigenous development of marine systems. Government of India has in principle decided to disinvest 26% equity share capital of BEML through strategic disinvestment with transfer of management control. The progress and impact of this could be a key monitorable in the future. It has secured orders for Africa, Central Asia, Indonesia, etc. for mining and construction equipment. It's pursuing opportunities valued at 2,000 crore across all three business verticals. It continues to invest on capex at 70 to 80 crore for the year, and company has considerable expenditure on R&D at 2 to 2.5% of revenue. Under the defense vertical, the key products are Tatra-based high mobility vehicles, vehicles for missile projects, bridge systems, aircraft towing tractors, and weapon loading trolleys, along with other equipment. Under the mining and construction vertical, a wide variety of earth-moving equipment such as bulldozers, loaders, excavators, pipe layers, and undermining equipment is there. Under the railway and the metro vertical, integral rail coaches, metro cars, broad gauges, rail bus for metro, and Indian Railways are there. Now coming to their financial summary, if you see here, despite everything, year on year, there was a revenue degrowth of 6%. though Q and Q it was high, but in Q1 they had a EBITDA loss. So, and the diluted EPS is down as such by 1.4% year on year. So that is negative. They are expected to do around 10% or switch off your volumes revenue growth over the next 2 3 years. EPS, I'll show you, it looks slightly difficult for me as such because FY25 also expecting them to do around 4,700 crore revenue, where they have done around 1,500 crore revenue in the first half. So nearly doubling that revenue over next 6 months is slightly difficult. So, and they had a loss in first quarter. So expecting this EPS is also difficult. So in my opinion, if they are able to do around 70 odd rupees also, that should be great in FY25. Uh, ROE, etc., is likely to improve because people are seeing order book visibility. So what they have done is they have reorganized themselves into 11 strategic business units and 2 micro business units under the 3 verticals. So now they have 11 strategic business units. So for mining, defense and rail and metro, etc., and 2 micro subunits. Now key ratios, etc., EBITDA margins is expected to improve, ROE is expected to improve, EV/EBITDA is declining, P is declining, so it is improving as such. But if you see the chart, it went up in June or made a high of around 5,400. But after that, because of the poor performance from the first quarter onwards, it has come down. It had had a major fall on Friday, and it has come down to test the 100 EMA. In my opinion, somewhere close to 200 EMA, that is at around 3,800, should be a level to get this. But be very careful with the quarterly results, etc. Because everything depends on execution of HMVs, ARVs, uh, metro coaches, VB sleepers, trains, bullet trains, etc. So they have got adequate amount of projects. And the other issue they were going up was because of likely divestment, which is not happening as such. Right till now, there is no news, though in principle approval was there. So one has to be very careful in this stock. And I would prefer to see this quarter's results and buy it on dips only. Next stock I'll cover is Amber Enterprises. It's an integrated market leader in Indian room air conditioner RAC industry. Our company has presence across all the components and finished products in the HVAC industry, heating, ventilation, and air conditioning industry. It has a 29% value market share in the Indian RAC industry. The company also provide HVAC solutions for mobility applications. Company's diversified product portfolio includes room AC, indoor and outdoor units, as well as window ACs. Company also provides RAC components such as heat exchanger, injection molded plastic components, motors, copper tubing, cross flow, and axial fans and sheet metal components. It has ventured into PCBA, PCB assembly, and other electronic component manufacturing to reduce dependency on the RAC industry only. This division caters to wearables, hearables, auto and telecom sectors. The recent acquisition of 60% stake in Ascent Circuits will further bolster the company's PCB offerings, which act as backward integration. It has set up a JV with Korea Circuits for manufacturing of HDI, flex and semiconductor substrate PCBs. Through its subsidiary Sidwell Refrigeration, it provides cooling solutions to railways, metro rail, and air-conditioned buses. It is looking to further increase its offering by creating a JV with Titagarh Rail System, which is leading manufacturer of passenger coaches in India. Now see here, their major revenues come in these 2 quarters. First is March quarters and the second is the June quarter. So year on year, the March quarter was slightly lower, but the June quarter was higher. Then margins have operating margins have improving now. So from 5 odd percent, now it's coming to around 8%. And EPS is also improving as such. So, but there is a tendency to show losses as such. So that is the negative part. So there is a huge cyclicality in even in a year in their revenue as such. So like if you see here, September quarter is always was there was always a loss, but this time since they are diversifying and the revenues have also improving and margins have improved, so they showed a profit. So what they are expected to do is they're expected to do around 8,800 crore of sales with a margin of around 7.7%, and FY26 they are expected to do around 10,600 crore of sales. So all these ROE, PE, switch off your volumes please, are expected to improve. Now, seeing their chart, if you see here, it had gone up and then it has corrected a bit, and now it is stabilizing around this. It had a very minor fall, that is 0.5% fall, because there was a block deal on uh, Friday. But closer to this 50 EMA, 5800 odd, should be a decent level to get this stock. Now, the last stock is Unimech Aerospace and Manufacturing. This is a upcoming IPO coming on Monday. It's an engineering solutions company specializing in manufacturing and supply of critical parts and other precision engineered components for aerospace, defense, energy, and semiconductor industries. The company possesses build to print and build to specification capabilities and supplies high precision and critical components to major OEMs and their licenses worldwide. It is one of the leading exporters of aerospace components catering to global customer base across USA, Germany, and United Kingdom. As of first half FY25, FY24, export sales accounted to 96 to 98% of the total revenue, of which the share of sales to US based customers stood at 83% and 92% respectively. So, portfolio of complex, high mix, low volume products, established player in a sector with high entry barriers. Global MRO maintenance, repair, and operation market is poised for significant growth in the next 4 to 5 years, driven by rapid addition of new aircraft to the fleet and setting up of a domestic MRO and manufacturing ecosystem in India. Combination of growth rate, strong margin, and reasonable valuation make it a good investment opportunity. Now, just remember IPO price is around 785 rupees. So if you see here, they are nearly doubling their revenue every year, and profit also is going up more than double. Margins are improving as such. So this first half only it is 40% plus. So that is good, and so that way they are performing well. ROE etc. are also improving. Now the FY24, 99% of the business was from aero tooling only, and other precision component was a smaller part. So basically, this is the clear segment, and the revenues left. If you see split geography wise, United States, including Canada, is around 92%, and Germany is around 5. Rest are West India, etc., is lower. So it is basically export oriented company. So logically, if it is export oriented with weakness in currency, it should be helpful to them. So if you see there, the year-on-year revenue growth is pretty strong, 121% in FY24. Gross margins are improving, EBITDA margins are improving. EPS FY24 they did around 12. So this year they should do around 20 to 22. So if it is coming at 785, this is coming at around 35 to 40 times, so which is pretty not very expensive. Return on assets is around 33% improving. Return on equity is also improving, and EBITDA margins are also improving. Rest of the short-term liquidity, long-term solvency, etc., valuation ratios are coming down, so it is good. Now comparing them with their peers, so if you see here, revenue growth, if you see as compared to the peers, this has got nearly doubling their revenue. Rest are pretty less, and MTR is just 1% year-on-year revenue growth. So it is comparatively much stronger revenue growth is there. And what I'm looking at is PAT. So at around 580 odd crore. So these are comparatively at 580 crore profit after tax. Sorry, this is in millions. So this is 58 crore profit. If you see 50 odd crore profit companies, if you see here, Valuation wise, this is coming at 4,000 crore and they are at 10,000 crore and 5,300 crore. So it is relatively cheaper as such, higher profit margins. Asset turnover is strong, so that means they're efficient. Return on capital, return on equity, etc. is good. Other parameters are good, so it is coming pretty inexpensive as such. So it is a IPO one has to really apply in full force. I have finished. We'll take questions now.